Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. I want to thank everybody for coming in today and joining me in the Middle Class Investor. Last week we added the Wilshire 5000 to our list of markets to look at, and you can see that we've had a break of this lower channel line and a close below, and that's. That is what it is. We had a lot of selling last week. There was a lot of news about Greece and potentially them leaving the euro and bondholders getting shafted and so on and so forth. And I'm sure that's not over. They're going to have some sort of referendum on the government this Sunday, and I suspect there'll be more volatility and turmoil in the European markets is associated with that move. Who knows what Greece should probably do? The problem is they owe so much money, and they haven't even really started to figure out how to cut their expenses. They've got so many people, associated with the government pay there that, they really. Borrowing money is not really their problem. Their problem is really they need to cut spending. I just don't think they have the political will yet to do that. So I think their problems are going to continue whether they get money or not. That's just the reality of the situation, I think. Here's the 10-year Treasury. We've been looking at this for a while. We got a little pullback this week in the 10-year Treasury. We could get a pullback. I'm going to pull this line back a little further because I think we could get a pullback into this area here, which is 2.259. Actually, just a hair lower than that even. Let's do it right there. So 2.218, just below. I'll show you what I'm looking at here. Just below this low right here, just below that low right there. So you can see this high right here is lower than this high, which tells me this is a corrective pullback from here to here, and we're likely to see that pullback into that area right there, and then move to the upside. So looks like we've got a little bit more time here in the U.S. Treasuries. I think I have. We can show it. I think I've got the JNK. That's the junk yield debt. You can see for the last 5 years it's been up, and away. And you can see here recently we've had a move down. We've had a correction back. It looks like junk yield, and this is most of what your high yield bond funds have got debt in, things like Puerto Rico. The problem with buying debt in the last several years in general is that in order to get yield, yield is that's what you're looking for when you're looking for high income. You're looking for yield. In order to get yield, you've had to go to places like Puerto Rico, which is in the news. You've had to go to places like Greece, Spain, Italy. All these places have too much debt for how much revenue, how much taxes they can bring in. Now, truth be told, so does the United States. But the difference between the United States and these other countries is the United States has the dollar reserve currency. So we're not subject, at least for the time being, to the same kind of rules around supply and demand or the economic laws that the rest of the world is subject to, which is why they think they can borrow money. They don't really understand why the United States can borrow so much money, but they can't. But, they're starting to figure that out. Let's look at the euro-US dollar. We talked about last week that the euro is probably on its way to a new low, and I think that's probably still the case, regardless of what happens. When I say regardless of what happens, surely something could happen that would change the direction of this trend. It just looks like to me, though, the euro wants to go down into this area here. So like a DP off of this low here, somewhere like it right in here, below the 105, close to parity with the US dollar. Could it go up from here? Yeah, it could. It looks like it still could, but this whole move up looks very corrective to me, given this long swing down. I mean, anytime you have a long swing like this, see if I can pull that in here and draw it. Well, it's not working like I thought it would. So anytime you have this long swing like this and you have a move against it, it's usually corrective. This is the dominant direction of the trend right here, and probably that's the case here. And so what we're looking at is this being the main. Whoops. Yeah, for some reason I can't get that to stick, so I'm just going to not mess with it. I'm sure it's giving everybody a headache. Anyway, if this is the direction of the dominant trend, this is likely corrective, this move up, and so we're likely to see a new low here before we go higher. Germany looks a lot weaker. You know, we've been looking at Germany for a while. We've been talking about how it looks stronger. You know, it's the best looking house in a bad neighborhood. But you can see Germany is sitting right on this trend line here. In fact, it broke below it slightly. And that is probably not good news. A lot of this news with Greece and Europe has to do with Greece not doing so good and them borrowing money at the German taxpayers' expense, and it's kind of ugly. It's kind of an ugly situation. You know, the Greeks feel entitled to be a part of the euro, which they don't see their role as a productive group. They just see their role as an equal member of the euro. And the fact is they're not as productive as the German people, probably just because they have too many people in government and they're not producing enough. But there may be other reasons for that, reasons that I don't know and other people don't know about. But they're definitely struggling, and now it looks like they're wanting to drag Germany down with them. So, you know, Germany's probably going to break this trend line. That's what it looks like to me, and go lower. So the UK has been looking weaker all along. I'm not sure anything has changed in the positive direction for the UK. And for some reason, I cannot get that to click. So let me go back up to Germany and just toggle down, see if that'll work. Yeah, that works. And you can see that the UK is likely rolled over here and is on its way to moving lower. Now, it does look like to me that it could go higher first, like it might trade sideways and then go lower. But it's definitely not going higher at this point. Again, we had this pretty strong move down. This looks corrective back up, so I'm expecting the UK to come down here and make a lower low. You know, the Russell 2000 is it's kind of interesting. This is a great place to short, you know, where the market broke out above its trend line, or broke out above this resistance area, poked its head up and just pulled right back in. This is a great shorting opportunity. I would think that the Russell is probably headed down here to the 1200 area before we see it bounce. So we'll probably see the Russell lower next week. Let's see here. Again, we're looking at the Wilshire. The Wilshire, that's something we brought in new. Let me go back to the Russell. For some reason, I'm not able to click on these markets. I don't know if they're doing some update on profit charts or what's going on there. But same thing with the Russell, although it has a little rising wedge kind of situation here. And you see I marked a new high, and the Russell promptly sold off. You know, it's pretty much already gone to support. It looks like it's rallying. The markets are very, very extended here. Can they go higher? Sure, they can go higher. They can do anything really, but they're very extended here, and you can see that in the volatility. The volatility spiked up last week. We broke outside of this down channel, this downtrending channel, and what we talked about is that when this line gets broken here, we're likely to see an expansion of volatility. Now, that doesn't mean volatility is going to go straight up. In fact, volatility might come in a little bit next week as the market rises a little bit, but then we're likely to see some sort of expansion of volatility that's going to take volatility up into this mid-20s area. And in fact, volatility is probably one of the better trades on the board these days. You know, the market, if we were to just toggle through a bunch of stocks, what you would see is a growing number of stocks in downtrends, even though the market is trading sideways or even slightly higher. And you know, we talked about the transports a couple of weeks ago, and the transports are definitely in some sort of bear market. And really all that was up before that, you know, after that was the financials. So you had XLF. So XLF was in a kind of you can see it's in a bull market, but last week it gapped down and got kind of weak. And if you look at things like Citibank, you can see it kind of dropped down. You look at JP Morgan, JPM, see it kind of, this is kind of a shooting star look. Now these are weekly charts, so they're not as dramatic looking, but anytime you have a gap, you got a gap up into this candle, and then you got a gap down into this candle. This is called a shooting star or an evening star. This is a very bearish pattern here. These three candles here for JP Morgan. What I'm looking at is these three right there, that pattern right there. This is called a shooting star. I think with the tail a little longer, it's called a shoot. Like if the tail were like this, it'd be a shooting star. But I think even with the tail short like that, it's referred to as an evening star. Also very bearish. If you look at Goldman Sachs, kind of a similar situation. You can see that you kind of gapped up, ran up, sold off, and then gapped down. It's very bearish situation for the financials. The reason the financials are key is usually the market is not going to move upward without the assistance of the financials. And then you have things like Biogen, BIIB. These were really strong stocks. Then they're starting to show a little weakness. Amgen, if I can type in the symbol here, AMGN, starting to show a little weakness. There's a whole bunch of, is it REGEN? Maybe it's REGN. Regeneron. Yeah, Regeneron Pharmaceuticals. These still look pretty darn bullish, but the group as a whole, which I think is the IYB. No, I guess not. The group as a whole really came in last week pretty good, along with financials. Anyway, what I was going to say is anytime you have these groups slowly starting to, if you look at the stocks behind these different groups, as they all start to downtrend, that starts to weigh on the market, and the market starts to turn. And that's kind of what's been happening. One by one, these groups have been falling into downtrends. And, you know, if you look at the SOX, which is dollar SOX, that's a semiconductor. You know, it's kind of similar to this one, this little sell-off back in here. We got a little sell-off happening in the SOX. These are all very new. If you look at like Micron really, I mean, look at Micron. It took a beating last week and the week before. Trying to think of some other ones there. Intel, I don't think Intel is as bad. But the group in general, you can see this one's building a little head and shoulders Here's a shoulder, here's a head, and here's another shoulder. And you can see I got this line drawn here. So we break that line, Intel's probably coming down here to 22. So that's about an $8 drop. Probably a pretty good trade. It's going to take a while. It's going to take a while for it to go that far, but maybe 5-6 months, something like that. You know what? We didn't look at Japan. The only reason I didn't make it. The only reason I was curious to look at Japan is to see if it made its target. We're expecting Japan to get up into this area here. It just hasn't done it yet. That's really about it. We can go over and look at the dollar. Here's the dollar on a weekly. Let's go to the long term. You can see the dollar high is back here. We had this channel. We broke out of the channel. We've broken out, kind of pulled back into the channel. Now it looks like we want to take off and finally get up higher in this area up here. Let me take this active trader off. Get up into this area up here and maybe even through that area. Let's look at oil. Oil, man. I keep thinking oil is going to get up here into this wave 4 area, and it still might. We can adjust this line a little bit. It still might get up there, start heading up in there next week, but it sure looks weak this past week, and the STF is starting to roll over. This STF is such that it kind of you can kind of see it's peaking here. And then a lot of times it starts to roll over, and that's probably going to bring oil down. But maybe the STF is going higher here. It's just hard to tell right now, and it'll resume its way into this resistance area. Right now, oil's kind of in no man's land. To me, it's a 50-50 deal. If you wanted to sell an iron condor, it might be a pretty good iron condor trade because you could sell a spread up here and sell another spread down here and just capture the movement in the middle. Let's see what else we have on here. We've got the DAX. The DAX is, here's the DAX. The DAX, it looks like it wanted to bounce, but I don't know. It's looking kind of weak. Looks like maybe it could come up, close this gap, and then who knows, crash or sell off at that point. So DAX does not look that great to me. Last week I was thinking it was kind of on its way to this DP area, but not so sure anymore. It's kind of in a no man's land. Bonds, they sold off, rallied, and have been selling off here for several weeks, which is driving yields higher. Got a little bit of bounce, but it looks like bonds want to go lower near term. So if you're in those bond funds, you really need to think twice about being in those bond funds. Here's the S&P 500 just to show you on a 60-minute chart. So maybe next week this sell signal goes on through and we make a lower low on the ES. Where might you see that stop? Keep in mind this is the ES. Somewhere around this 2043 area, 2040 area, and then we should get a pretty strong bounce and a corrective move back up, probably to close this gap up here. We do have a gap right here. Let me show you where. There's a gap right here in the market, and those gaps are almost always filled. That's why I don't think we're going to crash from here. I think we might go down a little further and then rally back up, close this gap around 2095 or so, and then who knows what's going to happen then. We might have a pretty good sell-off after that. That's really about it this week. There's going to be a lot of news going on with Greece. Greece is probably going back to the drachma. If not this year, then pretty soon. They've just got way too much debt and not enough tax revenue, and interest rates are going higher. None of this looks good for them to be able to finance their their debt going forward. I'll leave you with the interest rate chart. That's the one I think that's the most dangerous for most investors right now. And we should see this take off pretty quickly. And maybe the Greece deal is the catalyst for this to take off. Not sure. But I would expect interest rates to start climbing higher pretty soon here. You can see we're holding this trend line pretty good. I mean, from this area up, we're really staying pretty much above this trend line. We'll go ahead and leave that there. And I would say as long as we are above that trend line, and we might break it a little bit next week and come down to this 22 area and then bounce. But this trend line should hold pretty close. In fact, let's put it right there just to give ourselves a little room. And this trend line should hold, and we should start seeing rates moving higher. All right, everybody. Well, thanks a lot for coming in this week. Here's the YouTube channel, Middle Class Investor. I've never told you before, but if you need to if you want to email me or anything like that, feel free to do that. It's right here. I don't know if you can see it. Hopefully you can see it. I'll make it larger. You can see it right here. middleclassinvestor@gmail.com. So if you have any questions or you want to write back and forth about something, discuss something, share a chart, any of those things, do that at middleclassinvestor@gmail.com. You can follow me on Twitter if there's any interesting news or anything like that. Look for that news coming from me at InvestorClass on Twitter. And that is about it for the week, everybody. Thanks a lot for coming in, and hope to see you next week. Take care. Bye. See you next week.